All right, Mark, today I want to talk about something that's arguably one of the most powerful ways to give to charity in the entire tax code. I feel like time and time again, when clients are made aware of this, first thing they ask is, why didn't someone tell me this sooner? So it's pretty powerful. What's it come down to?
It all comes down to one of the many acronyms in the personal finance alphabet soup, QCD, Qualified Charitable Distribution.
Yeah, a lot of times here at Brandywine, we're trying to align clients' long-term goals or their philanthropic goals with their actual tax strategy. Yeah, nearly 15 years, Mark, working with wealthy families, we've never actually seen a family say, my charity of choice is actually the federal government.
Yeah, still waiting for that client, right?
Yeah, still waiting. Yep. All right, so at a high level, Mark, a QCD is simply moving money directly from your IRA right to charity, right? So it doesn't ever hit your checking account. Is that correct?
That's correct. And the age requirement is key. You must be age 70 and a half, and you can do up to $111,000 per year directly to a charity from your IRA.
So you don't have to do that much, right? You could do less than that.
That's correct.
So if I give $10,000 to my church out of my checking account and I don't itemize, I don't get a tax deduction or tax savings for that, correct?
That's correct.
Got it. Okay, so after what was the Secure Act 2.0, they now index this amount for inflation every year.
That's correct.
Okay, so it used to be 100,000. It was 106 last year, now 111. Those keep changing?
That's correct. So let's bring this to life with a real world example. Say you're 75 years old and you're required to take $100,000 out of your IRA this year.
Okay.
You also give $10,000 each year to your local United Way.
It's my regular charitable giving.
That's correct.
Okay.
Yep. What we often find is most people will take the full $100,000 from their IRA, withhold taxes, and then write a check with the net part of the net proceeds to their local United Way.
Okay, so basically they get $70,000 of that required distribution after taxes. They're writing a check from that $70,000 in net proceeds. And theoretically, they may not be getting a tax benefit for that?
That's correct. So instead, we can do a QCD, make that gift to the United Way directly using $10,000, thus reducing your taxable income down to $90,000.
Okay, so basically if I carve out $10,000 in this example of my required distribution, give it right to charity, I've never taxed that $10,000 ever?
That's correct.
Okay, so that's what makes the QCD so powerful, I guess.
Correct. And this is where we find it's most powerful. Most people tend to take the standard deduction, which means any gifts to charity means that they're not getting any incremental tax benefit at all.
Okay, so in that $10,000 example, if I'm not itemizing my deductions, I give that $10,000 to United Way, I get no tax savings at all.
That's correct.
And may have been the right thing to do, but I didn't get a tax benefit for it.
That's right.
So Mark, to use an example, just to play that out in real life, if I'm in a 30% tax bracket with my federal and state taxes, and I give $10,000 of my required distribution to charity, I get a $3,000 hard dollar tax savings, right?
That's correct.
So that's hugely powerful.
That is hugely powerful. We also have to remember the impact for Medicare, Part B and Part D premiums.
Our client's favorite topic.
Exactly. So as your income is higher, we can also experience higher Medicare Part B and Part D. So doing the qualified charitable distributions will help to bring down your overall modified adjusted gross income so that in turn, you can reduce future Medicare premiums.
So just without going down the rabbit hole, this is one of the only ways to reduce your adjusted gross income, right, for Medicare purposes, because there aren't many, right?
That's correct. That's correct. I mean, this is hugely beneficial for those, again, who are over 70 and a half, who are taking required minimum distributions as well.
Got it. Okay.
And there's also a long-term planning benefit as well. So once you've turned 70 and a half, you can begin taking the QCDs. This will help to gradually reduce your IRA balances over time so that you'll be looking at lower future required minimum distributions and in turn, lower taxes paid over the course of your retirement.
Okay, interesting. So less forced distributions from the government. And I can start giving money to charity from my IRA at 70 and a half, even though I may not have required distributions till age 75.
That's correct.
So Mark, if you're 70 and a half and all of your money is tied up in a company 401k, let's say you're retired, can you do the same distribution from your 401k direct to charity?
That's a great point. No, you have to do it from the IRA directly.
Okay, so in that example, it has to be rolled to an IRA first, then it can go to charity.
That's correct. There are a few important rules to consider with QCDs. One, they cannot be made directly to your donor advised fund or a private foundation. They have to go directly to a charity that's a qualified 501c3 organization.
Okay, a question we get a lot from clients, Mark, is a GoFundMe account. Something happened to a friend or family member of mine. We're raising money for XYZ cause. Would a GoFundMe account qualify?
That would not qualify. Again, it has to be a qualified 501c3 organization.
Okay.
So you just have to make sure that that is the case.
And for clients who say, look, my kids are my charity, there's no tax benefit you can't give to the kids, right?
That's also correct.
Okay.
Yep. And like most advanced planning strategies, we always recommend coordinating this with your financial advisor or tax professional, just to ensure that it's being done correctly.
And I would say that's probably the biggest takeaway, is essentially making sure if you're over 70 and a half and you're charitably inclined, make sure you're taking a look at this from a tax standpoint. As we see time and time again, this is overlooked, and it's the most powerful way, as Mark has mentioned, to give money to charity right from your IRA.
This is the exact type of proactive planning we love helping families with every day.
Yep, outstanding. Thanks, Mark. Yeah, if this topic resonates with you, if you'd like to see how a qualified charitable distribution fits into your overall tax or retirement tax strategy, feel free to reach out to us. We are here to help.